We're live. Good afternoon, everyone. Good afternoon, good morning, good evening, good night, wherever you are. You know that we are international. We're everywhere in the world. So, wherever you guys join us from today, thank you for joining us on today's live stream. As you guys know, we are VB Technologies. My name is Gershom Foucault. As always, we have with us Mr. Jason Wong, our co-founder for VB Technologies, and we have as the background person making things happen in the background, our producer, James in California. So, Mr. Wong, happy Monday
Good
to you, sir.
evening. Happy Monday to you and to everyone that is listening tonight.
Yes. How was your weekend, sir?
Our weekend has been exciting. I'll tell you. I mean, I was just, sharing a little bit with you earlier before we go on live. Our sales has been going off the chart, and we have one of our best months yet. Really, thanks to a lot of our, great leaders that we have that are really, really pushing hard during this, pandemic period. But I really, deeper than that, I really think that we have the right message, we have the right product, that people are looking for out there. So very happy for all of us who are already mining with us. And if you're not, my God, what are you waiting for?
Yeah, I mean, really, it's if you're not mining with us and you know about us and what we do, I mean, for those of you who are for the first time, being exposed to us and whatnot, that's different. But if you've known about us for a couple of weeks now or months and you're not on board with us, I don't know what you're waiting for. But Mr. Wong, I want to kind of pigtail on what you just said about the leadership. A lot of what's going on with the company is depend on the leadership that we have out in the field, the boots on the ground, so to speak. And speaking of the right product at the right time, I was talking to one of our big leaders in the office this morning. Most of you guys know her, Miss Lori Boko. And she and I were having a conversation. And what she's realizing, and I concur because I recognize the same thing too, is that we have a product that allows people to hedge themselves, especially those who are getting ready to go in their retirement years. You and I had a conversation last week, Mr. Wong, that a lot of times it's devastating to be in the stock market. Let's say that you have a 401k or a pension fund or whatever, and to see that get chopped by 40% or 50%, if you're in your 60s, and then try to recover from that is basically impossible. But with what we do as far as Bitcoin mining, it gives a lot of our clients the opportunity to have something that they could hedge against the traditional market. So when that goes south, they have something that can offset from that. So that's one of the great things I see happening. And I'm so proud of what we're doing, to actually be able to provide that to our clients, to save them, if you will, as they go into their retirement years. It's a beautiful thing that we're doing here. And I'm really proud of us and our members and for our clients as well.
Yes, absolutely. I think our product is well received, and it's just a perfect timing for this, the unusual time that we're going through.
Mm-hmm. Now, speaking of which, so last week we did talk about the Fed targeting higher inflation.
Yeah,
and we it's no laughing matter. But what else can you do? You laugh or you cry, right? Because here we are. We have a government that's literally telling us that their mission is to debase the currency that we use for day-to-day transaction. But on the flip side, what certain analysts are saying once they look at the situation is that, unfortunately, we cannot control what the Fed are doing or what the government is going to do as far as, their target for inflation. But on the flip side of that, that may be a positive for Bitcoin. As a matter of fact, they're thinking that by the Fed making this announcement, that this could drive Bitcoin to $500,000 per Bitcoin in a not too distant future. And one of the main person that's looking at that is Tyler Winklevoss. I mean, I'm not sure you guys know who they are, the Winklevoss twins. They were one of the first people that really got involved in Bitcoin. They have an exchange called Gemini Exchange. And when they look at the landscape and look at what the Fed's doing, they're thinking that this is very, very positive for Bitcoin, and this could very well drive Bitcoin into, you know, $400,000 or $500,000 per Bitcoin, which is very, very good for us, and I'm happy to hear that. But at the same time, I cannot, you know, just dismiss the fact that we actually have the Fed and the government that is literally, you know, their mission is to debase the currency. But I am curious to hear your thought, Mr. Wong. What do you think about the fact that the Fed targeting, you know, the inflation to go up could benefit Bitcoin and push Bitcoin to $500,000?
Because everybody's gonna, you know, from an everyday, you know, backstreet investors, you know, or small street investors to Main Street investors to Wall Street investors, they need, you know, something to de-risk and to hatch against. So I think Bitcoin really just comes in at a perfect moment. So I am no analyst. I mean, I don't know where the price is going to go, but I know and I feel confidence that, you know, with the oversupply or unlimited supply of, you know, USD, if you are an investor, if you especially you are approaching your retirement and whatnot, and you want to hatch against your portfolio, Bitcoins make sense. So I do see, you know, that as a catalyst to help push the Bitcoin price up.
Yeah, you know, one of the analysts, one of the things that they said, which is very profound, but it's absolutely true. So he said, look, there are two ways that the Fed could go, right? They have two options. Option number one is to, you know, increase the inflation and go after the poor, because inflation, you know, inflict tremendous harm on those on the lower end of the economic scale, right? Or they could go the other route and inflict pain on the rich by increasing the taxes, right? You know, come up with new taxes, increase the tax rate. And, you know, what they're saying is unfortunate that the Fed decide to go with option one, which is inflict more pain on the poor or those who are in the lower run of the economic scale. Now, here's the thing about that. That is absolutely true, right? And, you know, it's unfortunate, but that's just the way our society is kind of designed right now, to where a lot of times when the government takes certain action, it doesn't affect those who are well off as much as it affects those who are not so well off. And so here we are again with another example that by the Fed taking this action, right, to target a higher inflation rate, that's only going to inflict more pain on the poor and provide more gains for those who are on the upper end of economics, right, economic scale. And there you go again, you're going to have that widening of the rich and the poor, right? And yeah, it's unfortunate that these things happen, but hey, what are you going to do about it? But that's the fact of the situation right now. By these actions right here, it's only going to cause more pain on those who are the low end economic scale.
Are you surprised, Gershom? I am not. I mean,
no,
you know,
I'm really not.
Yeah. Do you have friends in the Feds? No, right? I don't either. So why would they listen to you and me? Right?
Unfortunately, I have no friends in the Fed.
Exactly. Federal Reserve Bank, right? I mean, if you are a BlackRock CEO, right,
yes,
or a CEO of JP Morgan Chase, as you know, then they might listen to you, right?
Yeah.
Otherwise, why would they listen to you or me? We you know, we don't have any friends there.
We have
speaking
no
of
say
that,
in the situation. But you know,
not at all.
You know, I know we're making light of the situation, but like I said, what is it going to do? You can either laugh or you can cry, right? But that's another incentive, you know, for those of us who are maybe not in the upper echelon of society as far as the economic scale, that should be more motivation for every one of us to do everything that we can to lift ourselves out of any lower socioeconomic situation that we're in do everything we can, take every opportunity that we can to try as best as we can to lift ourselves out of that situation. Because like I said before, there's no one coming to save you, right? And you have to figure out a way to get yourselves out of the situation. And the reason why I'm saying that is because I know what we do, right? And I talk to our members every day. I talk to our clients every day. And I see what we're doing for our members and our clients. And I know for a fact, Mr. Wong, and I'm going to say this is not a company statement. This is a Gershom statement. I believe that this company is going to create more millionaires than any other companies out there. I said, we've been around now for almost 3 years. Give us 6, 7, 8 years. There are going to be more millionaires in this company than any other company out there. And so I'm just proud for what we're doing. And that being said, as we said in the beginning, if you have exposure to this company and you don't know what we're doing and how we're doing it, reach out to us. We're more than happy to sit down with you and show you the things that we're doing that's allowing our clients to be more comfortable, especially those who may be close towards retirement, to be more comfortable as they head towards retirement because they know that they have something safe that they can rely on, which is Bitcoin and Bitcoin mining.
Hey, I want to take us back just for a little bit here. Speaking, when you were speaking about the Winklevoss twins, right? Mm-hmm. So far these guys have been 3 for 3, like that we know of. Like first they started the Facebook, right? Even though that venture didn't really work out exactly to the way that they planned it, but then so far they have the vision, they have the idea, and they put it in action, they implemented it, right? And then second, they bet their money after they made settlement with Mark Zuckerberg. They put their money, a large chunk of their money in Bitcoins. Early days.
Yes.
Early days, right? So, and then they put their money in Gemini, right? Which is an exchange, plus an app that allows you to buy and sell stocks for no fees. So far they've been 3 out of 3. So if I would have to, bet, I would bet with them, not against them. So yeah, I would say that the Bitcoin is going to go up.
Absolutely. They know what they're talking about. They have their ears to the ground and they have a lot of contacts. So, when those guys talk, you're right. You're right, Mr. Wong. And there's so many stories that we bring up on this live stream over the a few months we've been doing it. And one of the things that we try to emphasize is, look, we don't know everything, right? And we're not professional financial advisors by any stretch. But what we do know is that if you want to be successful, then you listen to and you mimic those who have been successful and follow in their footsteps. And so most of the information that we're bringing to most of our, to our clients are information from people who are multi-billionaires, guys that's been involved in the trenches, Wall Street guys, hedge fund people, and the things that they are seeing and the things that they're analyzing and coming up with certain conclusions, you have to take a step back and listen to what they're saying. When you have, guys like I said, Mr. Wong, the Winklevoss twins, they know a thing or two about the economic situation and what's going on and where it's going to head. And so, if they're telling you, hey, look, based on what the Fed is doing, their action is going to drive up the price of Bitcoin. Okay, so maybe it will go to 500,000. But even if Bitcoin go to 100,000, 200,000, isn't that a win? If you get into it now, right? If you get into it now, the price is 11,000 and change, and it goes to 100,000 or 200,000, isn't that a win? And let's say it goes to 500,000 or even to $1 million, like Raul Paul is saying, right? So if you're not involved in this space in some way, shape, or form, like you said, Mr. Wong, like, what are you waiting for, right? It doesn't take a rocket science to figure it out, right? So, guys, take some actions, okay? Don't just listen and hear and don't do anything. You have to take actions if you want to have some kind of success.
Yeah, I believe this morning on our Facebook page, we just sent out these sort of like a tweet or message, right? And I believe that a third of the U.S. population lives paycheck to paycheck, or 40%, maybe even 40% live paycheck to paycheck. And out of that 40%, 25% of them actually makes over six figures.
Yes.
Over $100,000, and they are still living paycheck to paycheck because, very unfortunate actually. We in this country, we don't have, we focus a lot on education, but then we don't focus so much on financial education. Educating our kids or our citizens to be financially, smart or financially responsible. So a lot of people, as they get a raise or they start going out there and start upgrading everything, right? So bigger salary comes with bigger bills, and
Yes.
and that's a big problem. So
you know what they say, it's not how much you make, it's how much you keep, right?
that's correct. That is
So
correct.
yeah, and you're right. So someone could make six figures and still live paycheck to paycheck. I remember a very long time ago, when I just got out of the military, and I was talking to some friends, and they were telling me that they knew a guy that lived in New York, and his income was over $1 million a year. He was making seven figures a year, and he was living paycheck to paycheck. And I couldn't. It didn't make it. I couldn't wrap my head around that. Like, how is that possible? But when they start to lay out to me the things that, his lifestyle, he's got a Ferrari, he's got a big, penthouse in New York, Manhattan, so all the things that he's doing on a monthly basis, everything that comes in goes out to support his lifestyle, right? Yeah. And so, it's not how much you make, it's how much you keep. And the reason why a lot of us don't really understand that is, like you said, Mr. Wong, the financial education school system is very lacking. And, it's not been taught. And you would think that that's probably one of the most important things that they teach us in school is how to, manage our finance, but that's not the case. And it's very unfortunate. It's very unfortunate for that. So anyways, our next topic. So Fidelity, and we talk about Fidelity quite often because they have been talking about getting into the Bitcoin space for a long time. And when they first made the announcement, I think it was last year sometime, that created a lot of excitement because we know they have around $8 trillion under management, right? 8 trillion, it's a lot of money. And so they have decided to create an entire new fund, particular just for Bitcoin. And so you have to think about it, right? If Fidelity, who manages $8 trillion in asset, is creating a whole new fund for Bitcoin, that tells me that the word on the street for them is that their clients are itching to get into Bitcoin in some way, shape, or form. And, they have big money clients. And so, for a very long time, Grayscale was like the big gorilla in the room when it comes to a fund that was dedicated to Bitcoin. And then some others start popping up, right? But now these big players like Fidelity realize what's taking place, and they can allow Grayscale to have all the fun. So now they want to get into the fund as well. So now they're going to create a whole new fund just so they can service their clients who want to be in the Bitcoin space. What are your thoughts on that, Mr. Wong?
Well, we see that coming already, right? I mean, we talked about Grayscale in our podcast, for, I don't know, in the last couple of months, many, many times we bring up their company name because they actually at one point single-handedly bought more Bitcoins that were available, that were available or that were mined by all these, miners out there. So they bought, I think it was like 150% worth of all the available Bitcoins mined during a
That's
certain
correct. Yeah.
period. So we know there's an appetite for that, right? For a smaller individuals like you and myself, we would probably take the easy route, right? We're probably just going to go to, Coinbase or some other exchange and just, buy a Bitcoin or a fraction of a Bitcoin actually, and just hold it, right? And for somebody who, a little bit more sophisticated and can see the benefit of mining versus buying, then they'll come to a reputable company like VBit and purchase a mining, package with the machines. But these bigger guys, actually, these bigger institutional investors, ultra high net worth or high net worth individuals, they have a lot more resources, and the regular exchange such as Coinbase is not built and is not there to serve their needs, right? I mean, we have read news articles, about these hedge funds, institutional investors coming in, buying $100 million, $250 million worth of Bitcoins. Where do you think they source that? They have to hire, broker that would have connections to buy it off, over the counter, off the exchange. And there are several benefits of doing it that way. For them anyway, it won't dramatically increase the price, so it keeps, the prices low so that they can get in. And then, after it goes up, they can sell them, or they can do a lot of different things with it, such as, maybe even offering some option contract and future contracts and things like that. But Fidelity is it's a very smart, financial companies. They smell the opportunity and therefore they act on it. Right? They have enough of their high net worth individuals or clients that are asking about it. They can't let that opportunity pass. So it's totally expected. So it's great for our industry, great for our members who are already in the game. But our message, our goal is to not just to have these, big institutional investors, get into, because our message, our goal is to have as much and as many of us, the average individuals, investors, to get into the Bitcoins, mining before the big guys.
Yeah.
So that it would be our turn, right? It is
no, you're absolutely correct.
Yeah.
And there are even some of the big guys that's getting into the mining space right now. Many of you may know this name, Peter Thiel, and he's a multi-billionaire, and he is actually opening up a huge mining farm in Texas because they can get cheap electricity in Texas. So him and his group is building a really big mining farm down there in Texas, and that goes to show you that how important the Bitcoin mining is to the entire ecosystem. And a lot of times, we talk about this because we have to emphasize to people, because it's very difficult for someone to really understand when you can get the instant gratification from going out and buying a full Bitcoin. A lot of people may gravitate towards that. But once you get educated on Bitcoin mining and what it does and how integral it is to the entire Bitcoin blockchain, the network, right? Then you realize that you are so much better off mining Bitcoin as opposed to buying Bitcoin. And then when you look at people like Peter Thiel, who is putting, I don't know how much he's put into that Bitcoin mining farm down in Texas, but when people like that, they're getting into the mining space, then you know that you're in the right business. You're doing the right thing. Because I always say this, keep in mind, without Bitcoin miners, there is no Bitcoin. Mm-hmm. And so, many people will try to, present some kind of a flawed argument that say, hey, you know, why should I mine? It's going to take so long. I can go buy one Bitcoin, blah, blah, blah. You have to understand, without what we do, the Bitcoin cannot function. So we always, as Bitcoin miners, always have to be profitable. It is designed for us to be profitable. I'm up over anything else, because if the miners are not profitable, then we're just going to close up shop, and then there is no Bitcoin. So the Bitcoin network is designed to where the miners are always profitable. And people will say, okay, but what about the halving? You know, that they cut the supply in half. Okay, that's by design, because that plays right into the supply and demand factor, right? The less supply, the more demand, drives up the price, which also drives the price of the transaction fees, which goes to the miners as well. So the miners will always benefit, no matter how you cut it. Miners will always benefit, and being a Bitcoin miner will always supersede going out and just buying the Bitcoin. Those big institutions, they don't have a choice, right? They're servicing their clients. They have to go out and buy the Bitcoin. But when they buy the Bitcoins, who are they buying it from? We are the suppliers, guys. We are the one that's supplying the Bitcoin to the entire ecosystem. I mean, not us alone. I'm talking about miners in general, right? So never underestimate what we do, and never undervalue what you contribute to the Bitcoin network as a Bitcoin miner in this space, okay? Remember that.
Very good point. We are the supplier. Very good point.
We are the suppliers.
For those of you who don't know, I mean, we mentioned actually Peter Thiel for many times. He is one of the original co-founder of PayPal. Some people call him the PayPal mafia, right? He was one of the original co-founder.
I've heard that term.
Also one of the early investor in Facebook. It was reported that at the early stage, he was able to acquire over 10% or 10 point some percent of Facebook stocks for $500,000. And then when Facebook, I guess, went public, I think it was like 2012 or 13 or so, he sold it for over $1 billion. $1 billion. This guy obviously is another very smart individual who can see the big pictures, right? Imagine that you were that person back in the early days when PayPal was first emerged, right? Because eBay was very popular, but there were a lot of issues with trying to pay the seller, and seller had a lot of issue, receiving payment from the buyers, during these auctions. And PayPal, or original was X.com, was the solution to all of that madness, right? So this guy obviously is really smart and can see, into, the future, by analyzing the current problem, that we're facing. So, when he come out and say, hey, what, he believes in Bitcoin and he see that there's a future, I believe it, because he's been right many times, he's been right many times. So
absolutely.
Yeah.
Absolutely, Mr. Wong. So yeah, I'm super excited for what we're doing and the direction that we're headed, and the leadership that we have, the vision that we have in our leadership group. It's really exciting. And I was talking to you before we went live how I know our vice chairman, Mr. Jing Gao, he can barely sleep. He's so excited about the things that's happening with the company. And I feel the same way for you, Mr. Wong. I was teasing you if you also having sleepless nights because you're so excited. But yeah, man, it's an exciting time. And I'm excited not just for us and the company, but also more so for our members than anything else, because I know the service that we provide, and I know that we're providing them a great service where they can go to sleep at night and feel safe, that they are hedged against any catastrophe that may happen in the financial market. So it's a great thing that we're doing. Okay, so this brings us to the time for a video, as always, right? And today's video it's around 10 minutes. It's around 10 minutes long, but it's a very, very good conversation between two gentlemen that I have a lot of respect for. One of them is George Gammon. And so they're talking about, what the Fed's doing right now and what's going on with the currency, right? Because a lot of people are looking and they're saying that we should get back on a gold standard, using the gold to back any kind of new currency that comes out. And I've been saying that I don't think that would work. And one of the things that I've been saying is that gold has failed us more often than not, right? Because if gold was the ultimate hard money in terms of using it to back any fiat currency, then why are we in the situation that we're in right now, right? So obviously gold is not the ultimate, because just like they did in 1971, when President Nixon took us off the gold standard. So even if you try to implement some kind of gold standard again, all they're going to do is just in the future take us off of the same very standard, and we're going to back to square one all over again. So this gentleman is making the case that, when it's all said and done, if you look at Bitcoin and gold, which one would be better to establish a hard currency as a reserve currency, right, to back up any kind of fiat currency that may be out there? So I think it's a very good argument, and I think that you guys would enjoy the conversation as well. So James, when you're ready, sir, please play the video.
How do we reverse everything the Fed has done? So they've taken their balance sheet to 800 billion prior to 2008, goes up to 4 billion, let's say. Now it's up north of 7 billion. And let's just be realistic. If they're going to do this yield curve control like you're talking about and pegging the curve, I mean, the balance sheet of the Fed's going to go 10 trillion, 15 trillion. What if they start buying equities? I mean, where does it end? So number one, how would they unwind that? And is that even possible for them to unwind? And if it's not possible, then what does that mean for the dollar? What does that mean for inflation, gold, Bitcoin?
So this is why I own Bitcoin. So, going back to somebody that I really admire from an investing standpoint, Ray Dalio. So Ray talks about there's 4 paths that a central bank can take when they get in this situation where interest rates are at 0%, there's no peg. We're completely dealing with fiat currency and interest rates are at 0% and pretty much across the whole duration. They have to start doing quantitative easing. And this is nothing new. This has been done throughout time and time again. Read the book, This Time is Different. We were talking about Bill Gross. This is one of Bill Gross's favorite books. That book probably provides 50 different examples throughout history of this happening time and time again, right? So when you get to 0% interest rates, your money has no peg. You have to start printing. You have to start supplying that liquidity into the system. And you pretty much have 2 paths to supply that liquidity into the system. You can do it straight into the financial markets by bidding financial asset prices, which is what we've done for 10 years. The other path is to put it straight into the hands of the people that call it helicopter money. Today, they're calling it universal basic income. Whatever you want to call it, it doesn't matter. It's the same exact thing as QE. The only difference is on the one side, you're bidding the assets. The other side, you're just putting in the hands into the people of the economy, the U.S. citizens, right? Both of those scenarios lead to disaster. And so Ray Dalio's point is when you get to a situation like this in an economy where there was manipulation to begin with, which caused the polarization of the game, like we didn't allow failure to occur. So that's how you get in these situations. Too much manipulation gets you in these situations. So now you have 4 outcomes that can actually solve the problem. The solutions I've talked about are the solutions that they always default to. Central banks always default to those because they somehow think that that's going to actually solve it, but it doesn't. It actually makes it worse. You have to either go, and this is Ray's point, you have to do austerity, or you have to do debt defaults, or you have to print more money, which is the one I talked about, or you have to redistribute the debt. And so at the end of this, the only way you can really kind of get to the ones that are going to reset the system is you have to have a currency reset. You have to have a new currency that emerges as the desirable currency. And so when I'm looking at this situation globally, there's no sound money anywhere. It's not like you're going to go to China and they've got sound money, or you're going to go over to the euro and they have sound money. Nobody has sound money. And so that's where this is such a unique scenario, is globally, there's no sound money. But when you look at something, for me, when you look at something like Bitcoin, or a lot of people like to say gold, that has a fixed supply, that's going to be the thing that ultimately resets it. And one of the reasons I like Bitcoin so much is because I'm not convinced that gold will actually solve the problem. The reason I don't, and this is a very controversial opinion that I have that I don't think very many people have, the reason I don't think gold will solve the problem is because gold didn't solve the problem from 1944 to 1971. Whether people want to believe this or not, we had an inflationary monetary policy from 1944 up to 1971. The reason we had an inflationary monetary policy, even though we were on a gold standard, is because you still had a trusted agent in the loop that was adjusting the money multiplier, which was a thing that just disappears after you don't have sound money, or quote unquote sound money anymore. But they were able to exercise an inflationary monetary policy by adjusting this money multiplier. They were able to increase the money supply by just saying, well, you used to be able to come to the bank and give me $1 for an ounce of gold. Well, then it became $4 for 1 ounce of gold. Then it became $20 for 1 ounce of gold. And so as you're adjusting that money multiplier, what happens is you're actually debasing the money. You're actually implementing an inflationary monetary policy because there's a human in the loop looking at the ledger of gold sitting in the bank account or sitting in the vault versus how much currency and fiat money is in circulation. If you're adjusting that ratio, you're still having an inflationary monetary policy. The peg is in by name only, okay? Where I think this is the first time in history we're in a situation where we might actually have sound money globally that can't be debased because there's no human in the loop. And what I also think is fascinating about this time in this massive big debt cycle that we're in, that Ray Dalio talks about endlessly. Yeah. If anyone wants to see it graphically, just pull up the 10-year treasury and look at it from 1940 till now, and you'll see this perfect, mountain-shaped curve of yield, where you saw it hit 16% in 1981, and it's come straight down. And from 1940s up until 1981, it went straight up, and then it went straight back down. So you can graphically see this long-term debt cycle and how we're at the end of it. And where I think, going back to the Bitcoin piece, and Jeff Booth talks about, well, what's the implications? What happens when we have an inflationary monetary policy for 8 decades? Because that's what I think we've had. It is literally since 8 decades we've had an inflationary monetary policy. I think what it does is it creates this massive incentive structure for capital investment, for technological advancement. And Jeff Booth's argument is we're now moving so quickly that the only thing that can slow this down, with technology outstripping humanity's ability to keep pace with it, is to have a deflationary monetary policy. And I think the only way you could possibly have that is with Bitcoin. That's the only technology that I see that could supply it. I don't think going back on a gold standard is going to supply a deflationary monetary policy. I think if we went back on, let's just assume all these governments can somehow get along. Okay, big assumption, right. Real big assumption. Let's assume that they can all of a sudden get along, and we stand up a new global monetary standard off of a gold standard. They're going to go straight back to an inflationary monetary policy by the debasement of that, right, based off of like what I described earlier from 1940s to 1971. They're going to do the exact same thing, which means we still have an inflationary monetary policy. We still have the incentive structure for technology to keep trucking at a breakneck pace, outstripping humanity's ability to even handle it. So it's an exciting but concerning, because it has massive implications that if Bitcoin would stand up as a global currency, what it would do to the debt market is somewhat unfathomable, to be quite honest with you.
Yeah, right.
It's unfathomable, because at that point, anybody who's issued debt, they're not getting what they're getting back in return is a total pittance. I mean, it's a total impairment for anybody that's issued
it's
debt.
almost like you do like a debt jubilee, because the central banks own so much of the debt that they just kind of forgive it and transfer to a whole new monetary system that people might have more confidence in, because that debt jubilee would probably ruin the confidence in the whatever was, whether dollars a reserve currency or anything like that. So that makes a lot of sense. Go ahead, Preston. I'm sorry.
So think of it like this: for just anybody off the street, let's say they just went and bought a house for $300,000 and they pretty much financed the whole thing. That contract is denominated in fiat dollars.
Right.
They are going to pay, like in the contract they signed with that bank is an agreement that I will pay you back in fiat dollars. If we move to a new currency that is much more desirable and it gets realized, like that debasement that we all know is happening gets realized through the pricing relative to this other currency, the person who borrowed that money is going to be happy to pay that back, right? They're going to be real happy to pay that back, because all they're doing is they're holding that new currency, and the one that they're making the payments for, that contract that's denominated in fiat, it's getting debased at 20%, whatever percent a year, and they're paying 2% to interest on it, right? So they're netting 18% annually, if those would be the numbers, right? And so I don't think very many people in the world are thinking about what that impact would be. And so when we go and we look at Ray Dalio's 4 things that reset the economy, redistribution of debt defaults are 2 of those components. Bitcoin supplies that in a major, massive, unprecedented way on a global scale. So if you're somebody who's issuing debt right now at 3%, 2% interest in fiat, and the contract says you're going to get paid back in fiat, boy, oh boy, you better be ready for it, because it's not going to be a fun experience.
All right. So hope you guys enjoyed that video. There's a lot to unpack in that video. One of the most important things I want to talk about is I'm not sure if the average person really understand what's taking place. And, I know that oftentimes we get caught up in our everyday lives and we're trying to, make the best decision for ourselves and our family. But I really don't understand. I don't think the average person really understands what's going on. We are in the middle of a currency reset, right? Because right now we have the world reserve currency, United States dollar, and our monetary policy right now is pretty much 0 interest rate. That means that the currency is dead. And so they're trying to figure out how are they going to reset the economy and maybe even have to introduce a new reserve currency. And there's a lot of things going on behind the curtain that we're not privy to. But the average person, you really have to understand that in the next coming months and coming years, some serious changes are going to take place. And if you're not ready for it, if you're not prepared for it, then you're going to be in a world of hurt. And, when these big institutions are putting hundreds of millions of dollars into Bitcoin, there's a reason why. And I've said before, don't just look at Bitcoin as an opportunity to get rich, right? Yes, we're all going to make a lot of money, because we're involved in Bitcoin, but there's so much more to what's going on than just getting rich. Right? We are absolutely on the precipice of going into a completely new economic system. That's where we are, and that's what's taking place. And it's just a matter of how that's going to happen and what it's going to look like on the other side and what that transition is going to feel like and look like, right? Because it's not going to just happen overnight. And it's going to cause some pain for us to go from this system into the new system. That's one of the reasons why the Fed is talking about this new digital currency, the new digital dollar. China just introduced their new digital currency, and actually they're testing it out right now. And I wouldn't be surprised if the Eurozone come up with their digital currency, because the system as we have right now, this debt-based system, has come to its end. Everything goes in cycle, and like Ray Dalio was saying, we're at the end of a 75-year debt cycle. And so we have to come up with a new currency system, especially for the world reserve currency. And what it's going to look like, we don't know. But what I do know, as I said before, I don't think gold is going to be it. I don't think gold can play that role any longer. And that's why I'm so excited for Bitcoin and what Bitcoin can do, because it is the first time we have a legitimately hard currency where we know it's 21 million and there will never be any more. And so Bitcoin is going to play a huge role in the new economic system. I'm just not sure how, but we have to understand that the way things are right now is we're not going to go back to things being the same. New things are coming down the pipe, and you got to be ready for it. Any words from you, Mr. Wong?
I think the author actually may use a couple of really good examples and try to make the audience understand what we're going through right now as a country and as a world. Every Federal Reserve banks out there are printing money or are doing their quantitative easings right now, with no sight with no ending in sight. So, with that being given, right, then your currency, your fiat currency that you're holding, will devaluate over time. How fast? Like he say, is it going to be 20% a year? We don't know, right? Nobody has a crystal ball, but we know that's the direction that we are heading, not just as a country, but everywhere around the globe. So, it just makes sense to protect yourself, to put it in a simple term, right? Don't stand there when you know that the freight train is coming down towards you. You want to get away from that, right? So don't stand there. If you stand there, one thing is going to be certain: you're going to get hurt. You're going to get hit by the freight train, and you're going to hurt badly.
Yeah. For the very first time, I think it's for the very first time in human history, we are on the entire world is on a fiat currency system, right? It used to be at some place on the globe, they would have a hard, some kind of hard currency, backed by gold for the most part. That's like gold is always a standard. But it's the first time where every country, every part of the globe is operating on a fiat currency system. And what we're facing right now is really the death of fiat currency. And so you're right, Mr. Wong, it's not just here in the US, it's global. And the current currency reset that's going to take place, or that is taking place right now, right before our eyes, it's a global thing. It's not just, one region or one country. It's on a global scale. And one of the things that the author was saying, like you pointed out, Mr. Wong, is, he's saying, look, I don't see how all these different countries is going to come together and agree to a standard. That's just
right.
That's just not going to happen, right? We're all at each other's throat right now, right? So that's not going to happen. Now, I mean, Mother Nature may force us to the table. They may force all of these world leaders, so to speak, to the table to figure it out. But I don't see it happening. But who knows? It could happen. But we have to understand that what's taking place is global. What's taking place is the global fiat currency system is on its last leg, and something is going to take its place. Now, I believe that Bitcoin is the front runner and is the best currency that we have right now that could take its place. but we'll see. The governments may come up with something. We don't know, but you have to take measures to hedge yourself from this dying system. And right now, the best bet that we have is Bitcoin. There's nothing else. You can have some gold as diversification. This is not financial advice, by the way. This is an opinion, but I think any rational person have to realize that they need to have Bitcoin in their portfolio in some way, shape, or form.
Yeah, having hoping that every reserve bank out there and all the governments out there would come together to try to solve this currency crisis. It is next to impossible. Just think about how many different ideologies we have out there, how many different trade zones that we have out there. Even within the EU, how many different countries, and all of them have different opinions, right? And within the US, how many regional Federal Reserve banks do we have? Why do we have so many? Why can't we just have one? Well, it's because even within our country, there are differences, different ideologies, different points of view, different way of doing things. So, asking all these trusted agents, meaning all the Federal Reserve banks around the world, to come together for some kind of consensus to solve this fiat crisis is next to impossible. Yeah. I don't have any hopes on that, actually.
Me neither. Having said that, though, Mr. Wong, unfortunately, throughout history, these kind of situations oftentimes lead to war.
Right.
And, it's a lot of times you don't want to think about, because in today's society, the way all these countries are armed to the teeth with all kind of mass destructive type weapons, war is the last thing that you want to see. But unfortunately, that's what it comes down to most of the time is, to solve this issue is war is one of the things that comes into play. And so we'll see. Because the United States being the most debted nation in the history of the world. And so I don't think that we're going to default on the debt, because that also probably lead to war. China have, over $2 trillion or so of their debt on their books. So us just defaulting on that is not going to work. Mm-hmm. So we can hyperinflate the currency away, the debt away. We can do that. So there are three options. We can default on the debt. I don't think that's going to happen. Or we can hyperinflate the debt away. That's a possibility. Mm-hmm. Or we can go to war. So of the three, I think that they're going to end up hyperinflating the debt away. That's what I think is going to happen. The other two, I just don't see that happen, because if we default on the debt, that means war. And if we flat out just find a reason to go to war, then, either way, it's not going to be good. So as bad as it is, I'd rather them just inflate the debt away. We figure out a way to deal with it at that point. So we'll see. Mm-hmm. Interesting times, Mr. Wong. Interesting times.
Also, great opportunity time for
yes, absolutely,
for us, right?
Yes.
Yeah. So don't lose sight and don't forget about that. So
yes,
in
every crisis, every crisis creates great opportunity. Mm-hmm. most tycoons, if you will. Mm-hmm. Most empires get built out of a crisis. So there will be opportunities. It's just a matter of, you recognizing it. Like right now, what we're doing is an opportunity, because the change is taking place. We're actually in it. Most of us don't recognize it, but the change is taking place right now. This is not the typical, the stock market, has a correction and, all of that. the change is taking place. The amount of money printing, the amount of cronyism and corruption, the system has to get reset. It cannot keep going on like this, right? One of the things I kept saying to myself, I keep hearing this term, too big to fail. And in a capitalistic system, there is no such thing as too big to fail, right? In a capitalistic system, you have winners and you have losers. And when you make a bad decision as a corporation or a company, then you're supposed to lose and go into bankruptcy. And then, that company get taken over by a more efficient management, and they can restructure the company and, make it better. But in today's society, they talk about too big to fail. I mean, right now, the airlines are literally threatening the government that, look, if we don't get another bailout, we're going to lay off, 20,000 people. To me, that's a threat. Like, they just got a bailout, right? They mismanaged, their funds, doing stock buyback and all of that, fatten up the executive pockets. And they just got a bailout. And now they're saying, hey, we need another one. And if we don't get it, we're going to lay off 20,000 people. The system can't keep going like that. So we definitely need the system to be reset. It's just a matter of that's going to come with some pain. And if you're not ready for that pain, then I don't know what to tell you. But the system can't keep going like this. All right. Mr. Wong, our last topic for the day, sir. And
so it is not too big to fail. It's gotten so big we cannot let it fail. So, like you say, we need some bigger guy to come in and bail it out. So, i.e., in the 2008 financial crisis, right? AIG, and all these other financial companies. We just get other banks to come in here and bail them out, and so they have failed. So it's not like they have never failed before. They have obviously failed. It just we get the Fed, we get the banks to come in and bail them out and just come up with a solution. So same thing in our currency crisis, actually, not crisis, currency, but the fiat. Yes. It's going to have to be reset at one point, and how it's going to be done, and what is the best way to do it, we have to see. But I think so far, Bitcoin looks pretty good. So
yeah, I think so too. So looking at the clock, I think we are at the time we're going to wrap it up. We'll save the next topic for our next live stream. So guys, once again, thank you for being a part of this live stream. We always appreciate it. I hope you guys are learning some things from this live stream. As we intend to bring you guys information that you may not hear or see or read anyplace else. We try to bring information from different places and try to bring it, under one source, so to speak. So I hope you guys are enjoying it. We're going to wrap it up now. Don't forget to join me tonight at 9 p.m. for a compensation structure webinar. So I'll be doing that at 9 p.m. Eastern time. I will drop the link in a few minutes in the Telegram group, by the way. Mr. Wong, any last words for the folks, sir?
Hey, guys, stay safe, all right? And I will see you guys on Friday.
All right. That being said, guys, have yourself a wonderful evening. I will see you guys tonight, and the next live stream is Friday. Oh, don't forget tomorrow, 7:30, for our regular membership training, okay? All right, see you guys later.